Hello and welcome. You're watching Business Today TV. I'm Sakshi Batra. Well, the IPO rush continues on D Street with two new IPOs getting listed first, Delivery IPO and Venus Pipes, and a new IPO opening on the street as well, which is Aether Industries, which has launched its IPO today. It is a specialty chemicals firm, and this IPO will be open until 3 more days. So today, tomorrow, and day after, 3 more days it will be open for. Now, whether or not you should decide to subscribe to it depends on these fine details that you should know before you put in your money in this IPO. Now, although most of the analysts are still positive about the IPO and have been recommending subscribe rating for long-term perspective, medium to long-term perspective as well, there are slight bit concerns on the valuation front. But first, you should know about these details. So it's an 808 crore rupee IPO. Most part of the IPO is going to be a fresh issue of shares of 627 odd crore rupees. There's going to be an OFS or an offer for sale also of 181 crore rupees as well. Remember, this fresh issue has been trimmed down from 757 crore rupees earlier, and this is on the basis of the pre-IPO placement plans as well. Now, the IPO price band is 610 to 642 rupees per share, and bidders can actually apply for shares in a lot of 23 shares in each lot. And the minimum lot that you need to apply for is 1 lot, where you will get 23 shares too. Now, of course, Aether Industries is valued at 32 times FY24 price to earnings, and this is as per Ventura Securities estimates as well. Ventura Securities in its report has said that considering the growth opportunities in the specialty chemical space, especially in pharma, agrochemicals and FMCG space, also the improving prospects of the contractual manufacturing and CRAMS and Make in India initiatives, they have actually recommended a subscribe rating to this issue too as well. Apart from this, you should know that the proceeds from the fresh issue will actually be used by the company for funding the capital expenditure requirements for the proposed greenfield project in Surat, Gujarat, and a payment of debt to also fund the working capital requirements going forward from here too. Remember that Aether Industries is actually focused on producing advanced intermediaries and specialty chemicals involving the complex and differentiated chemistry and technology. Now, the products of the company actually find applications in various sectors, including pharma, agrochemicals, specialty, electronic chemicals, material chemicals, high-performance photography as well. In total, the company produces about 24 products, of which it is the world leader in 4 products, and in India alone, it is the only manufacturer of 7 products of its portfolio things as well. So it is definitely on a strong footing as far as its product portfolio is concerned. Now, Angel One analysts have said that in terms of valuations, what they have noticed is that historical top line and bottom line CAGR of 50% and 75% is what they have noticed. The company has a diverse customer base as well. There's a strong financial track record, high ROE as well. So considering all these positive factors, they believe that valuation is at a reasonable level. This is as per Angel One. Angel One has given a subscribe rating to the issue as well. Now, some of the positives that you may know about the company are differentiated portfolio of market-leading products, focus on R&D. Also, if you talk about the strong and long-standing relationships that it has with its diverse customer base, there's a synergistic business model which is focused on large-scale manufacturing and contract manufacturing as well. The company also has experienced promoters and senior managements as well. The key concerns, however, at this point in time that you should know about is that the business is dependent on manufacturing facilities, and some of the companies like Angel One have said that any shutdowns or slowdowns in manufacturing operations can definitely have an adverse impact on the company. Currently, Angel One believes that it derives a majority of its revenue from only top 20 customers, which is 73%, which are without having any long-term contracts. So that could be a potential risk that all the investors or potential investors should know about. Also, the non-compliance and changes in regulations could also be something that investors should know. But other than that, if you talk about about Choice Broking, which has given a subscribe with caution rating. Angel One has given a subscribe rating. Ventura Securities has given a subscribe rating too. So the company fundamentals look strong at this point in time. However, some analysts have pointed out stretched valuations as a concern in this current market scenario as well. Now, the issue will close on May 26th. So there's another IPO opening for you. So do stay tuned for the listing ceremony as well, and all the updates over the next 3 days. The company has already garnered 240 odd crore rupees from the anchor investors right on day one so far. Already some of the other portions like QIB portion, retail investors portion, all of them have started to get some trickling in information as far as the subscription figures are concerned. Remember, the QIB share is 50%, non-institutional investors share is 15%, and retail investors shares is 35%. So you do have a great margin in case you're a retail investor. Then you do have chances of getting it because of the size of the IPO that is open for retail investors as well. So keeping that in mind, those are the details that you should know before subscribing. I've also shared with you what the top brokerage houses are really talking about this issue.